Workers' compensations. What is a worker compensations? Worker compensations, commonly referred to a worker comp, is a government mandated program that provides benefit to workers who become injured or ill on the job or as a result of the job. It is reflectively a disability insurance program for workers, providing cash benefit, health care benefit, or both to workers who suffer injury or illness as a direct result of their job. In the US, workers' compensation is handled primarily by the individual state. The requirement benefit vary greatly state by state. Texas is the only state that does not require employers to maintain workers' compensation insurance. Key takeaways: worker compensation is a form of employer insurance coverage that pays benefits to workers who are injured or become disabled as a result of their job. By accepting workers' compensation benefit, the employer pays the right to sue their employees for damage. The compensations may include partial salary payment and coverage of medical costs. Workers' comp is not the same as unemployment benefit or disability insurance. Understanding workers' compensations benefit and include partial wage replacement of for the period during which the employees cannot work. The benefit may also include reimbursement for the health care services and occupational therapy. Most workers' compensation programs are paid or by private insurance from premium paid by the individual employees. Each state has a worker compensation board, state agencies that oversee the program and intervenes in disputes. There are federal worker compensation programs that cover federal employee, longshoremen, and harbor works and energy employees. Another federal program, the Black Lung Program, handles death and disability benefits for coal miners and their dependents. Worker compensations benefits requirement for worker compensations vary from state to state, and not all employees are covered in some states. Some states, for example, exclude a small business for the mandate for coverage. Others have a different requirement for various industries. The National Federation of Independent Business maintain a summary of each state worker compensations requirement. Salary replacement. The salary replacement an employee under work compensation is typically less than the person's full salary. The most generous program pay at about 2-3 of the person's gross salary. Worker compensation benefits are not usually taxable at the state or federal level. Compensation for much of the lost income taxes may be due to recipients who also have income from the Social Security, disability of the supplemental security income programs, healthcare cost reimbursement, and supply benefit. Most compensation plans offer coverage of medical expenses only related to injuries incurred as a direct result of employment. For example, a concentration worker could claim compensation for an injury suffered in a fall from scaffolding, by not for an injury incurred while driving to the job site. In other situations, worker can receive the equivalent of sick pay while they are no medical level if an employee dies as a result of work related incident. Worker compensation make payment to the worker dependents.